John Piper with the weekend video, and it's Saturday the 8th of February. Starting with the Dow this morning, we've got similar patterns actually on the FTSE and the DAX as well, but a pretty clear 5 waves up. 1, 2, 1, 2, 3, 4, 5 for 3, and then a straight rally for wave 5. We've now got an A, B, C, A wave and a B wave. Looks like a 1, 2, 1, 2, pretty direct 3, 4 and 5, making up 3. So it looks like we've got perhaps one more, just a pair. Maybe take us down to around the 29,000 level, which is just below the 38.2% level. It could extend, but right now in terms of time, the actual rally phase to here bears a sort of reasonable relationship to the declined phase to here, as it were. So I would expect a low pretty early next week, really. So I'll be looking out for that. A false break below 29,000 might be something to watch out for. I mean, obviously you need to look at it in real time to really judge these things. But I remain pretty positive on the equity markets at the moment. I'd expect some pretty solid buy signals. I mean, the wave 1 took us from 28,200 roughly to 29,500, so that's 1,300 points plus, 1,300 points plus. So you could see a couple of thousand points up here. So that could be a meaningful trade by, I think, anybody's standards. FTSE very similar. I mean, the low was seen just the end of January. So 1, 2, 5 part 3, same basic pattern, 4 and 5, followed by this A, B, and it looks like the 5 waves completer, in fact, 1, 2, 3, 4 and 5. So the low could already be in on FTSE at the moment. Retracement down to, again, the 38.2% level, which is just there, so not quite, but almost. So again, it looks like we should get more upside next week. So I'm looking out for buy signals first thing on Monday morning. Alright, well, the DAX got the same basic rally, starting just from the last pip before February, last bar before February. 1, 2, 3, 5 part 3 wave. Very subnormal 4 really, and a 5. Also very subnormal decline here, A, B, C, B, C, so there could be more to come there. Haven't even hit the 23.6% level yet, so the DAX may want to sell off a bit more. I guess that's a slight warning sign, but again, you need to go with what you see when the market's open already. Alright, gold, well, no change of opinion here really. We're still seeing this correction. It looks like an A, B, with a C due to around 1500, 1510. I mean, this doesn't look terribly impulsive. I mean, it could be, I guess. Maybe we're seeing a triangle, so it may be the correct count here is, this is actually an A, a B, a C, a D, and then an E perhaps. That's not impossible. But I don't think the correction's over yet, no real sign of it. So I think it's carrying a little bit longer, but not too much longer. I mean, we started off this on the first week of 2020. So it's been with us for over a month now. We've seen the A and the B wave and part of the C wave, so a few weeks, a week or two ought to really just cover this, complete this, and the rally is the next phase from the chart, certainly. I mean, it's perhaps uncommon for the equities and for the precious metals rally at the same time. So I mean, that maybe something needs to be resolved, but for the time being, these charts look positive. Equities now, gold in a little while. Right, so we've already seen the ABC, or appears to have done so. So it could be here we have got the first wave up. We have got 5 waves, in fact. 1, 2, 3, 4, and 5. So it could be that silver's going to start accelerating the upside, whereas gold is for some reason might languish. But again, that's another issue that might well get resolved one way or the other. I mean, again, it's possible we're seeing some kind of triangle on silver as well, I guess. So it could be that we're seeing a B wave here. So we've seen an A wave down to here perhaps, a B wave to there perhaps, and then a C, D, E perhaps. But that doesn't actually necessarily reconcile the differences. But for now, we do have some evidence of a new uptrend, but it has seen quite a sharp pullback, which could be impulsive. So, but it should become pretty clear, I think, pretty soon. All right, finally, Bitcoin. I think we've seen 5 goes up. It's the most likely count. So we've got a correction due. We are, of course, right at the point where we could see a breakout. There is one alternative count. It's a bit messy, but 1, 2, 3, 4, and 5. I mentioned this in my report on, I think, Thursday. That could be a wave 1. I mean, the 4 isn't ideal, but that could then be a wave 2. I mean, the wave 1 would then take us just above the trend channel, just out of the trend channel. Wave 2 back in again, and now there's a wave 3, i.e. 1, 2, and now we're going to see an acceleration phase. That would mean we're going to see a very strong rally almost immediately. So a bit of a dichotomy. I mean, obviously, if this count is correct, then we want to be long, very long, because it could be a very, very big rally. Obviously, with the normal considerations to risk management, etc., etc. Whereas the other count, if this is a complete 5 to where we are now, calls for downside. So it makes the decision making a little bit difficult. I mean, you just watch what's happening there to see. I mean, I remain long with Bitcoin. I hold the coin and various other coins, and I plan to just hang on to those or hodl them if you like. Whatever happens, well, not whatever happens, but a correction, if we can see an ABC correction down to maybe 9,000, 8,000, that doesn't bother me. Whereas, obviously, what I'd like, that would be ideal for adding to positions, of course. I can add down there, that would be perfect, and then see the thrust. Thrust comes now, then it means it's more difficult. In a spread betting sense, this is it's much easier to buy something and hold it than this is to spread bet something with stops, because obviously if you buy something when you see a breakout, a thrust up, and then it goes back in, you get stopped out. Whereas if you buy something and hold it, and then it goes up eventually, then you just reap the profits when that happens. Now Ethereum actually looks like we are seeing this sort of thrust up at the moment. So if that was a 1, and this is the 2, then we've got 1, 2, and 3 of the third wave, and that looks quite a good count. The only problem there is that there's no clear 5 wave advance up to that point. So I suppose you could say this is a 5, 1, 2, 3, 4, 5 for 3, 4 and 5. The only problem being that the wave 1 and the wave 4 overlap in that case. But certainly I think this count has some validity, especially on Ethereum, less so on Bitcoin, where we're not seeing that sort of breakout. And of course they can behave independently. There are different coins, different parameters, different news items, etc., etc. But no change of overall opinion. I think we're going up. I think we're going to see Bitcoin to new all-time highs, above 30,000, I would think. Ethereum's got a lot further to go to achieve that. I mean, it was about 2,000, so it's still around 10% where it was, whereas Bitcoin is back at half of what it was, which is quite a significant difference. So I say no change. I think the crypto space is going to be the best performing asset class of the year, as it was last year, as I understand it. But exactly the timing, of course, is the issue I'm talking about. Anyway, I hope you found it interesting, useful. Back to the report on Tuesday for subscribers. This is a great time to subscribe if you're not subscribing, as there's a lot happening, and get this right, there could be some very substantial profits in the hand at the end of the next few months. Thanks for listening, and bye for now.